Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's Monday, the 21st of September. This is the last full week of trading for the third quarter of the year, and it's been quite a week last week, and it's going to be quite a week this week. We want to look at this market in a little bit longer term because the reality is we still feel that the major trend is down based on our monthly trade triangle, which is right here at 17,579.27 on the Dow. You can see that's where it came in right here, and it really has gone down. We are neutral on it right now because we had a signal last week to exit short to intermediate term positions. Our score is 55. That indicates a trading range right now. Now, the important thing, one of the important things to look at in my mind, is to look at the RSI and where we are in the RSI. Now, this is the RSI indicator right here. You can see it right here. That's the RSI indicator. And what we're looking at now is the fact that we're right up against this resistance. You see, every time it's gotten up here, it's turned back down. I think this is going to be no different this time. I think we'll turn back down perhaps later in the week and then, or even today, but I still think the trend is overall going to be on the downside, and we'll see more of a push from here. I don't think we're going to go up. And I think this high that we saw right here, which is the 61.2% Fibonacci retracement level, is going to hold. I think it's not going to be changed at all. I think that was a pullback. Be sold. We said that before. We had the big sharp down day. The Fed is out of the picture now until next month. But generally speaking, the trend longer term, according to our trade triangles, is negative. Pretty much the same picture on the S&P 500. We're up against the RSI line, which is resistance, 55, a trading range. I think this is a pathetic little rally we're seeing so far today. I don't think it's going to go too much further, and I think we'll turn down eventually, perhaps later in the week. As you can see, the Nasdaq has been a pretty spotty affair. It's been a little bit stronger. You can see we have a 70 reading here. Doesn't mean too much, but the major trend is down. You should be out of this market for the time being, letting it settle down. You're dancing along the 50 line, indicating it really doesn't know which way it wants to go. So best to stand aside for now. Looking at the euro, that's sort of, you should be out of this market now because we use the monthly for trend, but more importantly, the weekly for timing. So you should, the weekly intermediate term trend is up, which is this one right here, and the daily is down, indicating you should be out of this market at the moment. We're right back down to the 50 support line. However, our trade triangles are mixed, indicating you should be out of the market right now. Gold, pretty much the same picture there. The weekly trend is still down and negative, and the daily trend is positive, indicating you should be out of the market right now. It's a minus 65, indicating a trading range. So you can see it's pretty choppy. We are above the 50 line, which is a positive, but nonetheless, it's still not a clear-cut, easy to discern trend in our opinion. Crude oil, we're still positive on this market. You can see it's dancing along the line right here, the 50 support line. You have a weekly and a daily positive, so it's still a good sign. 50 indicates somewhat of a trading range, but nonetheless, the weekly and the daily still positive, indicating that the trend should resume on the upside. We're still positive on this market and think it will go higher. We've looked through our trade triangles. There's really nothing to show you there, but no new buy signals for sure. Let's take a look at the internet portfolio, which we talked about in today's blog. So we simply go to our home page, which is right here. You see the model portfolios, all of which have done very well. The internet portfolio is the one we're looking at today because we compared that to the hedge funds. You can see 65% return in 2013, 16.4% in 2014, and we're over 24% for the year so far. And these are our current positions. Sidelines on Netflix and on Facebook, sidelines on Yelp, short Yahoo, and long Amazon. These are the only two positions we have out of 5 positions. So we're only using, in this case, 40% of our portfolios in the market right now, and they're both winning trades. The other 60% is on the sidelines in cash positions. Remember, that's a position in and of itself that you can use to protect your money. We give you the signals every week, so you can see a weekly trade triangle, exit on a green triangle, green weekly trade triangle at 32.99. So we tell you the positions where the stops are, where you should get out and where you should get in. So that's the important thing to remember. Listen, thank you so much for watching this video. We appreciate, we know you have a lot of things to do, so we appreciate your time. And we'll be back tomorrow with some updates on the markets, and we'll see how they close today. Have a great trading day, everyone.